Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me joining is Cheryl D'Souza. And viewers, this is the show where you get all your stock related queries answered by the experts. In a short while from now, you can connect with us live on Twitter as well as on WhatsApp number. You can send us your query, the stock name that you have invested in, and also the time horizon you wish to stay invested in that particular counter. Don't forget to mention your name as well as your buying price or the entry price for that particular stock, and we will try to get answers from the experts. What should be your strategy? But moving on and having a look at the markets today, the up move in the Indian markets continue because yesterday we have seen Bank Nifty coming back to 25th January levels, and the momentum is getting stronger from there on. And not just that, after a bounce exactly from its 200-day moving average, the uptrend in the Nifty 50 also continues. But which are the sectors that are pushing the rally upwards? Have a look at the PSU banking space. All of these banks from the likes of Bank of Baroda, SBI, PNB holding up strongly. Other than that, power index is also holding up gains of around 1.6%. Oil and gas as well as metals are some of the sectors that are buzzing in trade. But talking of stock specific action, Adani Enterprise as well as Bajaj Twins taking the rally upwards. But on the flip side, on the back of the news flow, UPL is under pressure with the cuts of over 1.5% as well as some profit booking taking place in HDFC Life as well as some of the private sector banks, Kotak Mahindra Bank, HDFC Bank as well as HDFC Limited are having some bit of a drag onto the banking index. We're talking of the stock specific action. There are a lot of stocks on the back of news flow as well as earnings, and today we're going to be talking about two counters. Firstly is Nestle India. Just a short while ago, the company has reported its numbers. We get a deep dive onto the numbers as well as also CG Consumers is also in focus, Cheryl.
Absolutely, Shrishti, a very good morning to you, and you've outlined perfectly what are the stocks that are in focus at this juncture. It's definitely Nestle India has come out with earnings, and not only Nestle India, coinciding with Nestle India, you also had Nestle Global that came out with their earnings, and apart from that, you have CG Consumer that is in focus in today's trading session. But talking about Nestle India's numbers, if you look at the numbers, the PAT is coming at around 736 crore rupees compared to an ET now estimates of 588 crore rupees. I have my colleague Vinny who is here to tell us exactly how Nestle performed in the quarter gone by. And Vinny, Nestle, how would you term these earnings as? Because we've seen also global numbers come out.
Absolutely. So, just when we look at the Nestle India numbers, comparing with what the street was expecting, what we at ET now were expecting, numbers are above expectations, especially in terms of the revenue and profit. We've seen a much stronger growth than what we were expecting. The only factor that we're keeping an eye out on is the margins because they were in line with estimates. So, all in all, we could term it as a good set of numbers that have come in from the company. Revenue growth of 21%, profit growth of around 24.5%, margins remaining stable at what we were expecting, 22.65% versus 23.2% what we expect, was the company reported in terms of last year. Yes, what is impacting the margins? We had spoken about this. Milk prices, they have continued to remain firm. That's the commentary even coming in from the management. So yes, only milk prices is a concern. So that is continuing to impact the margins of the company. Other than that, the management commentary, what they're highlighting is early signs of recovery in terms of the softening of the commodity prices, whether you look at edible oil, wheat or packaging material, that has seen a softening in prices. So yes, the impact of this and what we'll start seeing on margins, that comes with a lag effect. So that improvement in margins maybe could be starting, that we'll start seeing it from the next couple of quarters. One factor to watch out for is the milk and sugar prices. Other than that, the company said that they've seen a strong growth across their categories as well, whether you look at it in terms of noodle category or biscuit category, they have seen a strong growth. Even out of home consumption, company highlights that is also continued to do well. And in terms of the rural urban demand, they have said that they have there was a strong demand, strong momentum over there as well, and rural growth has been strong as well, secular and robust, being led by volumes. That's the highlight coming in from the company. So rural growth commentary also has been quite positive this time around from Nestle. All in all, good set of numbers. Right now, maybe some bit of a decline in the stock that we are seeing coming in, but nothing bad in terms of numbers there.
That's the commentary coming in from Nestle India as well as the numbers review from Vinny. But Vinny, no doubt the numbers are good for Nestle. You can see the stock bounce back. But what is happening with CG Consumer in today's trading session is under severe pressure, and this after a management change. And why is that?
Absolutely, we're seeing severe pressure coming in over there. Significant management changes actually that have happened over here. Now, Matthew Jobs, I beg your pardon, who resigned from the company as the CEO of the company, and his last day is going to be 30th of April 2023. In his place, we'll see Promit Ghosh, who will be appointed as the new MD and CEO of the company with effect from 1st of May. Also, do not forget, Shantanu Khosla has resigned from his position as the MD of the company, and he's elevated as the executive vice chairman till April 2024. See, Shantanu Gosa was already in turn and in line for retirement in 2025. So yes, it's nothing out of what we were expecting for Shantanu Gosla, because he is just elevated as the executive vice chairman. Now, what the street is actually fearing is that, Pramit Ghosh has actually a lack of experience, because he's coming in from an investment banking background that he has in the last couple of decades as well. And how will he be leading a consumer electrical company is something that everyone is watching out for. How will he continue in terms of the strategy? And that is what is highlighted by Investec in its note as well. Even JP Morgan is highlighting similar factors, and they're also saying that there is some bit of an uncertainty in terms of the strategic priorities and execution approach that we could see coming in from Crompton Greaves Consumer Electrical. So yes, because of that, fear about the lack of experience that Pramit Ghosh is coming in from a investment banking space is keeping the stock under pressure today.
Well, thank you so much for that, Winnie, for highlighting why Nestle India as well as CG Consumers is in focus. But let's move on onto the show and connect with our experts and know that what should be a strategy in both of these stock names discussed. We have Narendra Solanki, Head of Research, Fundamental Research at Anand Rathi Shares, as well as Kunal Bothra, as always. A very good morning to both of you, gentlemen. Firstly, Mr. Solanki, let me come to you. Nestle India from the FMCG pack is the first company coming out with its numbers. What do you make out of it? Because the stock has already shown a good run up in the past 1 month, trading near its all-time high level. So, what are the next targets you are looking at, and also what to pick up for the whole FMCG pact, and which are the other companies in focus for you?
Yeah, good morning. I think if you look at initial results, then it looks good, in line with our expectations. And prominently, if you see the volume growth commentary by the management, so that is comforting, because in FMCG pack, what we have seen that volume growth was lagging since a few quarters, and it's very good to see volumes coming back, especially if you see the rural segment. So that is an encouraging sign, and which is also very positive for the sector. And coming to the margins point of view, the commodities price decline has really shown improvement in the profit margins of the company, and the sector should also be seeing a similar trend going forward. And volume growth coming back is a key point to note, and this looks very good for the whole sector.
All right, so that's the view coming in from Narendra. But Kunal, good morning to you. Good morning to you as well as Narendra. But Kunal, what's your take coming in on Nestle? First cut, the numbers, like Winnie said, looks good. But how is it looking on the charts to you, Nestle India and the entire FMCG pack? We've already seen the rally play out, or we are continuing to see rally play out in ITC. HUL also is not far behind. So among the FMCG names, which one is the one that you like the most?
Well, yeah, I think ITC and Nestle are the two names which have actually done reasonably well. ITC is already perched at a major high for itself. Nestle, I think, has just crossed about the 20,000 mark last week or so, and after recovering from 18,000 levels, which means the recovery for Nestle as well has been extremely attractive. Now, the likes of Tata Consumers, Godrej Consumers, these stocks are trying to show signs of decent recovery for themselves, but you'll have to wait out for maybe another week or couple of months for these stocks to break past about their previous 52-week highs for themselves, as well as the life highs. But the entire FMCG pack looks attractive. Nestle, ITC are the two names which are looking quite attractive at current levels, and Godrej Consumers would be the other stock which could probably potentially head towards the previous major high breakout, possibly in the next 1 or 2 months.
Okay, so both of our experts are positive on the FMCG pact, and Kunal highlights that Nestle, ITC as well as Godrej Consumers are the stocks that are looking good at this point in time. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, we'll be taking all of your stock related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get to answers for all of your stock-related queries. Remember, we are live on Twitter as well as Facebook, or you can connect to us on the WhatsApp number that's flashing on the top of your screen. Each time you write into us, please do mention your name, the stock that you're looking to invest in. And if you've already invested, mention the buy price as well as the quantity and the time horizon. That will help our experts help you better. So let's bring on board then our experts for today. Today we have Kunal Botha as well as Narendra Solanki from Anand Rathi Shares and Stockbrokers joining us on the show. Once again, good morning to you, Kunal, as well as Narendra. Thank you so much for joining us on ET Now. And Narendra, we've entered the entire earnings phase, which means that it is also marked by volatility. In such a scenario, what should retail investors do, or what sort of a strategy should they adopt to make sure their wealth is protected?
Yeah, I think you have to closely continue to monitor the earnings of the companies which you are invested, and take a call based on the earnings. And coming to the overall volatility scenario, I think the global volatility is expected to continue to remain. However, keep focused on domestic based businesses so that you can somewhat remain insulated from the global market volatility. So, having a major share of investment into domestic based businesses would be a much better strategy for near term.
Okay, domestic based businesses is something that you should be looking out for and closely track the earnings. That's the advice coming in for all our retail investors. But with this, viewers, let's kickstart taking all of your stock related queries one by one. And the first question that I have is coming from Jay Krishnan from Kerala, and he's holding Dixon Technologies from a price of 2,985 rupees. Kunal, what would be your advice for the medium term investment? What should he do? Should he average at these levels?
Yeah, I think you can look to average at current levels. 2850 is a good support for Dixon Tech over the near term, but I'm not sure whether the charts have actually reversed over the medium term for Dixon Tech, because the selling the stock had seen in the fag in the month of January, that overhang is still present into the stock price, which is why you're not seeing the major rallies getting converted into any kind of a strong trend for the stock. So I think I would just be a bit more circumspect over the medium to long term. But yeah, from a short term play, the risk reward at 2850 levels could probably warrant a decent accumulation or a buy and dip zone at current levels.
Okay, another one is coming in from the viewer has not mentioned his name. I believe his name is Ramamurthy, and he's asking about between BHEL and BEL, which one is a best buy, because he wants to buy about 1,000 shares right now. He's from Bahrain. No doubt his time horizon is for the next 6 months to 1 year. But fundamentally, if you have to take a call for that short of period of time, Narendra, which one do you think would stand out, BEL or BHEL?
Right now, both the stocks are not under a hierarchy coverage, but if you look at the overall sector, then BL has much more prominent presence in defense space. And if you see the order traction, the orders are also very healthy in BL, and the kind of outlook which BL offers is also very promising. So, if you look at overall sectoral position, then BL is in a much more better position in comparison with BL.
What's your view on this? If the time horizon is 6 months to 1 year, BEL or BHEL?
I would recommend BHEL out of the two. I think that's a very strong and an excellent chart over the medium to long term time scale. So even though the stock is struggling, there is a lot of news flow for the stock, and that makes the stock a bit more volatile. But purely in terms of the charts and the merit on them, I would select BHEL.
Okay, moving on. And the next question, Narendra is from Thakure from Ahmedabad, and he wants to know, can he buy LIC at these levels? What's your advice coming in?
See, post IPO, the company has been lagging in terms of growth as in comparison with private sector insurers. So, taking a fresh position is not good if he is already invested. One more disclaimer: this stock is not under our coverage. So, looking at a sectoral, private insurers are looking much better position in comparison with LIC.
All right. This next one that I have is coming in from Rahul, and he was a short-term viewer, Electra Green, and this particularly from you, Kunal. He's mentioned you in the query. He's holding about 750 shares at a price of 680 rupees per share, and he's saying his time horizon is just 1 month.
Well, I'm not sure within the next 1 month the stock is likely to do any major kind of an upward trend, because the last 2 months back the stock has already gone through a very strong uptick. So I think from 400 levels the stock had jumped up to 700, 720 mark, and then so this was in the month of January, February, and then over the last 2 months the stock is going through a time wise correction. Ideally, in this kind of a scenario, we don't expect the stock to go into such a kind of a strong up move, unless the stock completes 3 to 4 months of sideways correction. So possibly in the next 1 or 2 months I would expect more time wise correction for Oletra, and in case if the stock happens to come back towards the 600 mark, that could be a level where you can look to average further.
Okay, Kunal, one more query coming your way from the auto space. The question is from Narayan, and he is holding shares of Ashok Leyland from a price of 163 rupees a piece. Haven't been performing, at least on a YTD basis. What's your outlook? Can he average at this point in time?
Well, I've been consistently advising to try and exit Ashok Leyland and shift to some other quality, performing auto stock. So yes, of course, Ashok Leyland is also a strong quality stock. But then surprisingly, the stock has been an underperformer over the last so many years. I think the stock has remained in the range of 160, 165 on the upside, 120, 25 on the downside, as a broader range for the stock price, and which is why I think making strong returns into the stock has become a bit more tricky. I would advise to switching to some other auto names. So I think in that regard, some of the suggestions which I can probably suggest at current levels, one would be Tata Motors, of course, which I've been recommending quite consistently over the last many years. You can look out for Bajaj Auto, which has given a big breakout on the monthly charts at current levels, and possibly if looking at short term, then I think Hero MotoCorp could be another interesting bet.
Alright, this one's coming from Vinayak, and he wants to know if GE Shipping is a good company to hold on to. Narendra, he already has 1,000 shares at a price of 450 rupees per share. Do you think it's a good bet to stay put with? He's already making a profit on this holding though.
I think this stock is also not under our active coverage, but I think most of the positives have been priced in the sector, and the sector seems to be stabilizing right now. So you can switch over to a next different growing sector.
Okay, Kunal, next question is for you. The question is from Bharat, and he wants a combo view. Firstly, he's holding one of your favorite stocks, that is Vector Foods, at a price of 560 rupees, and the other one he's holding is HDFC Life from a price of 575 rupees. Is that a hold or switch in both of these counters?
So hold, of course, for Vector Foods. You've already mentioned it's one of my favorite stocks. So it's still a good stock to hold on to. The structure has just evolved into a bigger breakout for Vector Foods on the monthly time frame charts. Of course, you have to be patient enough for the stock trend to really play out over the next maybe few quarters as well as few years. HDFC Life, I would be a bit circumspect, even though the stock, I think after yesterday's strong news flow, moved up well, but then it's been unable to break past about the 200 moving average. So in fact, I was actually waiting out for the stock to break past about the 200 DMA on closing basis, but it failed to do that even on a strong, kind of a positive news flow yesterday. So I think that brings in the near-term prospects a bit more dicey for HDFC Life. I would wait out for maybe another couple of weeks. Let the prices settle out. If in case if it hits back about the 200 DMA and closes about that level convincingly, then we can go into a buy mode. Or else, if the stock corrects and say comes back towards 500 or below, that could be a good risk reward to initiate a buy, but not at current levels.
Alright, this one is coming in from Nayan Gandhi. He's writing to us from Sikandarabad. Narendra, he wants to know if Visakha Industries is a good company to invest in the longer term. I'm very unsure if you tracked this one, but in case you've been able to track, or you track the sector that this operates in, do you think this one is worth a buy?
Yeah, we have a coverage on this. The recent performance was dragged down by high raw material cost and operating performance. And however, the demand side is very good, so you can continue to hold. And as the commodity prices have come down, and the demand side continues to remain strong, the performance is definitely going to improve in near term.
Moving on to the next query, and the next query, Kunal, this one is for you. The question is from Suresh, and he wants an advice on Canfin Homes. He's holding the shares from a price of 530 rupees, and the other one is RBL Bank from a price of 140 rupees. So what will be your advice? Continue to hold on to both of these stocks?
Yeah, hold on both of them. RBL Bank specifically, I would expect the stock to come back towards 170, 175, possibly in the next 2 to 3 months. The trends are quite strong for RBL Bank. For Canfin Homes, the only concern is the very high beta nature of the stock price and the sudden speed of news flow, which tends to damage the sentiment for the stock price over the near term. We've seen two sharp corrections for Canfin Home in 2022, where the stock, in just a matter of I think 1 or 2 months, fell off. For example, from 675 to initially 425. The second correction was from 650 levels to 475 levels for Canfin Homes. That's the only concern for a stock in terms of the chart. But other than that, I would expect both of the structure to play out quite well. I would recommend a hold on both of these stocks.
Okay, Kunal, this one is coming from Sushil Kumar Trichy, and he has two companies, which is a recently listed IPOs, but he wants a view on for 6 months or so. So, in case you have been able to track this one is Glenmark Life. He bought at an IPO price of 720. The other one is Shriram Properties, 115 rupees per share. Should he hold or average, or what sort of a target should he look at for both of these counters? 6 months is the time horizon.
Very difficult to comment. Don't have too much of price history, so I'll skip this query.
Okay, by any chance, Narendra, you had a chance to look at both of these counters, Glenmark Life as well as Shriram Properties.
Uh, Glenmark, we don't have any coverage, and I think for Shriram also we don't have.
All right.
Okay, moving on to the next query then. Kunal, the question is from Sukanya, another financial name. She's holding 100 shares of Federal Bank from a price of 131 rupees. Wants a short-term view on the Federal Bank, and going ahead, what is your outlook on the banking space?
So extremely bullish on the banking space over the near to medium term. Of course, yes, right now maybe the bank Nifty would probably be coming closer to the overbought zone, maybe at 43,000 odd levels. But then those are phases of the markets which tends to play out from a short term play. Stocks sectors go into overbought, they correct, and then they come back into a rally phase. That can probably play out for the banking stocks even going forward. But Federal Bank is an interesting play. The stock seems to have come back towards a good retracement support. 125 is where the stock has bounced off multiple times in the last 6 to 8 months. And on the upside, I think 140, 143 seems to be a resistance for Federal Bank. So hopefully in this move, you can expect 140 to 143 as a potential target for Federal Bank.
All right, that's the view coming in on Federal Bank. And on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock-related queries, so don't go anywhere.
Welcome back to Buy Now Sell Now, a show where you get all your stock related queries answered by the experts. We have two experts onto the show with us today, and continuing with the same, the next query coming in from Ramesh Narendran. This question is for you, and he wants to know your take on the power stocks, and for the next 6 months, which counter among Tata Power or Adani Power he should enter at current levels. Narendran,
I
this
think
question.
overall, if you look from the demand side perspective, the power sector looks promising. However, there are regulatory challenges for the sector which is continuing. One is operational efficiency, which has historically remained low, and second, the collection inefficiencies within the sector. Considering you have to consider all these things before taking a position. However, in comparison with both, I think Tata Power is much better for the stock in order to have an investment position.
One is coming from Ramesh, writing from Kolkata. 500 shares of Dream Folks at the price of 466 rupees per share. Kunal, does it make sense to hold or exit this particular counter?
I'll recommend to hold on, even though the history is a bit limited. But then the recent charts have started to show signs of 50 DMA being formed for Dream Folks. The stock has been holding on to that 50 DMA in the last at least 1 or 2 months, from earlier levels of 400 to now I think 434 or 440 is where the 50 DM moving averages for the stock price, and it's been holding on to those levels broadly on a closing basis. So my sense is that if this time around it's a very similar kind of a pattern, then the stock may bounce off from those levels and come back towards 475, 480 mark, which was the previous swing high. So I think it's a good buy as well as maybe a hold at current levels.
Okay, moving on to the next query, and this one is coming from a viewer which didn't share his names. I'm just taking his query. Narendran, do you track Mishtan Foods? He's holding 1,000 shares at a price of 10 rupees. Would you be able to advise him?
No, we don't track it.
Okay, Dudla Dairy, is this counter in your focus list? He's holding 50 shares at a price of 480 rupees.
No, no. This one also not under our focus.
Okay.
Okay, Kunal, Ircon International and Poonawalla FinCorp, 1 year target is what Ranjan is asking. He's writing to us from Delhi. Also, I believe he's asking which one is the better to invest in. So I'm guessing that he's looking to invest in either of these counters. How are the charts looking for them? And also, what sort of a target can he look at?
See, I think both the charts are attractive for IRCON as well as Poonawalla FinCorp. Of course, both of them are from different streams altogether. Poonawalla FinCorp, the stock has gone through a recent breakout as such. I think 293 was the previous breakout for previous resistance for Poonawalla FinCorp. The stock seems to have crossed those levels convincingly, so it started to move up higher. It's not yet given a life high breakout for itself as of now, so which means possibly the uptrend could continue for the stock, and if it breaks past about the life highs, we can look out for maybe 340, 350 as the immediate target for the stock. The only concern with Ircon is the recent rally the stock has already shown. So on monthly charts, the stock has confirmed a breakout, but the risk reward to enter may not be great. So ideally, in this kind of a scenario, you have to size your positions differently. For example, if you're buying say 100 quantity, for example, for Poonawalla FinCorp, then the 100x value, then the average value which you should deploy for Ircon has to be less than 100 because of the way the risk reward is poised for both of these stocks.
Okay, moving on, and Narendran, coming to you for the next one. We were just discussing at the top of the show about CG Consumers, how the stock has tanked after the MD resignation, and Manian wants to know: is this good time to enter this company? Crompton Consumers is the stock.
Yeah, I think the company is into a very great sector, and from demand perspective, the demand is very good, and the company, if one is having, then he can continue to hold. And of course, any changes in the top management does definitely have a short-term uncertainty regarding the stock, and investors wait for the new management's performance and then reassess. So if you have, then you can continue to hold it.
Kunal, this next query that I have is coming in from Indu, and she wants to know what sort of entry level and a stop loss should she keep for Anupam Rasayan for a positional trade, given that it has already gained so much recently.
Well, entering at current levels will be very, very tricky because the stock has moved from 600 to I think 1100 in just a matter of 2 months, or I think less than 2 months from the February lows. So, entering at current levels would be a very skewed kind of a risk reward for Anupam Rasayan. Ideally, in this kind of a scenario, you have to wait out for at least a 10% to 20% correction to start off with when you're looking to buy the dips, because we don't know how much is the mean reversion which could happen and when the mean reversion could happen. But then such kind of recent chart patterns spikes, they generally indicate that whenever the stock goes into a correction, the correction could be at least 10 to 20% if not more. So buy on dips is what I would advise, not at current levels to enter. Maybe start off with a dip of 10% to 20% from current levels.
Okay, Kunal, once again, query for you. Julie from Delhi is holding shares of Technopack, purchased at a price of 94 rupees. She just wants to hold it for the next 2 to 3 weeks, but sitting at a loss. What should be her strategy? Hold or continue to stay invested or exit at these levels?
I think exit at these levels, not an interesting chart as such, and I think I would recommend to exit. It's best time to now start shifting towards large cap names because the markets have started to show signs of good recovery. So it always makes sense towards shifting to large cap stocks, quality names, rather than sticking to these kind of stocks.
All right, let me take this one from you. By any chance, do you track India Bulls Housing Finance, Narendra? Because Sushil Kumar from Trichy, we took his queries earlier, but since both of you all didn't have a view on either of the counters, India Bulls Housing Finance is purchased at 153 rupees per share. Should he average right now? Make sense, or should he exit from this counter?
No, we don't cover this company right now.
India Bulls Housing Finance target or target price for this one to exit or average?
Well, if you are in from a short-term trading play, then only it makes sense to enter into the stock price because it's been a gross underperformer in both the recovery from the 2020 lows as well as the correction from 2021 highs for the overall market. So I think in that aspect, it's not a stock which idly warrants a hold from long-term play. Yes, over the short-term charts, the stock has shown signs of some bit of recovery. But then, if you're playing in for 10%, 15% kind of an average rally, only then it makes sense to stay invested over here. But other than that, I would suggest to not look at the stock from a long-term play. It's better you switch to some decent performing stocks. I think Shriram Finance has recently given a big breakout in the long-term charts. Chola Finance is something which has looked attractive from a long-term play. So it's better to make that switch broadly from this stock towards these names if you're a long-term investor.
Okay, moving on to the next stock. And the question is from Dr. Sham from Nasik. And Kunal, this question is for you. He's holding Jindal Drill, 100 shares at a price of 200 rupees. What should he do in this particular counter?
Well, just recently the stock has given a breakout about 300 levels. I think 313, 314 is where the stock is trading right now. The recovery is quite strong. I think from 240 levels just about last month or so, the stock has recovered to 313. But I think at current level, it's a good time where you can look to at least book out partial profits, if not more. Trail your stop loss to maybe 290, 295 for Jindal Drill and continue to hold on for higher levels.
All right, with that, let's kickstart with the rapid fire then. Narendra, since you are very new to this particular segment, you just need to give your answer very shortly, whether it's a buy, hold, or sell recommendation for our viewers to the queries that we ask you. Kunal, let me ask first one from Purnima on ABB 43 shares, 3,260 rupees is a buy price. Should she go ahead and book profits today or stay put with this?
Good time to book out profits if you're a short-term trader.
Okay, Kunal, TP Vinod wants to know good time to enter Asian Paints June futures. What's your outlook, or should he buy now or wait for lower levels?
Wait for lower levels or else wait for a breakout about 29-25 mark.
Okay, this one is coming in from Anjali, has 500 shares of Time Techno at 95 rupees per share. What should she do, Narendra?
We don't cover that, so you can exit and switch over to different stock.
Okay, the next query is on SGS Enterprise. Kunal, Dr. D. Mazumdar is holding 200 shares from a price of 538 rupees. What's the next target for this one and how are the charts looking like?
Well, I think today is the day where the stock has given a minor up move, but I think just play out for maybe another 10% uptake over the next couple of weeks and then to exit.
Okay, Kunal, another coming your way. Ravi Tega wants to know about Adani Enterprises and Bank of Baroda. Either one of them short-term target.
Bank of Baroda targets, I think 188 was my morning target for Bank of Baroda. Would stand by for that kind of a target over the near term.
Okay, Narendra Deepak wants to know, is this a right time to buy IDFC Bank shares?
We don't have any coverage on IDFC right now. However, the banking as a space, you can continue to remain in this sector.
Kunal, would you like to give an advice on this?
Yeah, I think IDFC First Bank could be a good buy at current levels, and also from a long term play, I think it's a very good buy.
Kunal, Rajeshwari from Chennai wants to know about Sumitomo Chemicals, 100 shares at a price of 519.5. What's the short term target?
It's been an underperformer. I would not suggest a buy on average at current levels. Better to switch to SRF or Naveen Puri.
Okay, Narendra and Anand Sandeep wants to know about Nureka Limited holding 150 shares at a price of 602. Investment horizon is next 6 months. Can he average?
No, we don't have any coverage on this.
Okay, Kunal, any advice on this?
Don't track the stocks, so wouldn't be able to comment.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Narendra, as well as Kunal, for joining us on the show and taking our viewers through all of their stock related queries and also giving your view on the FMCG pack. And viewers, on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll come back with an earnings candidate and the management interaction, so don't go anywhere.